7 years ago today, I got approved for a loan to buy my first home in Australia, but I decided to rip up that contract, and at the very last minute, I decided to put all of my money into Bitcoin. So today I want to actually run the numbers on that decision to find out whether I have actually lost money by buying Bitcoin or whether I should have bought the home. But we're not going to stop there. I also want to run the numbers and have a look at whether buying property in some of the best performing real estate markets in the world, like Los Angeles, like London, and like Canada, would have actually outperformed Bitcoin. And we're also going to be answering the hotly debated question in the Bitcoin space. Should I buy real estate or should I buy Bitcoin? The answer might surprise you guys. So today I'm going to be showing you guys 4 different little spreadsheets that I have prepared for you, looking at Bitcoin compared to the performance of the best performing real estate markets in the entire world. But once we're finished with those 4 spreadsheets, I'm also going to talk about 4 different arguments for why we should or should not own real estate. So those are going to include an economic argument, but also an emotional argument, a political argument, as well as a couple of others that might surprise you. So you're gonna have to wait to the end of the video to see those. But let's jump straight into this first chart, looking at the performance of Bitcoin compared to real estate prices in Australia's 3rd largest city, Brisbane. So again, I did get approved for a home loan in Australia for a home in Brisbane, Australia, all the way back in 2018. So what I have on this little Excel spreadsheet is the property price of the average home in Brisbane, Australia on 5 different time frames. We have 2010, 2015, 2018, 2020 and 2024. So I want to keep this as realistic as possible. So I'm going to show you guys an example beginning in the year 2018 when I was approved for that home loan. Now for the average size home in Australia, you typically have to put down around 15 to 20% as a down payment. So that works out nicely to be around $100,000. So what I've done with this Excel spreadsheet is I've actually calculated how much my $100,000 invested into a home in 2018 would actually compare or perform against $100,000 invested into Bitcoin in 2018. Now I wanted to show you guys this specific example and time frame for a couple of reasons. One, because it's realistic. This is the exact decision I was personally faced with. And the second reason I want to show you this time frame is because a lot of real estate investors will say, but Bitcoin's hugely volatile. You can't compare the returns of Bitcoin with real estate because Bitcoin got really big percentage returns in its first 10 years. Well, this is why I like the time frame of 2018 to 2024, because in that time frame, Bitcoin has only really experienced one big bull run, okay? So Bitcoin was in a bear market for most of 2018 and even 2019. We did see a little bull run in 2020, but it was actually Bitcoin's smallest bull run, okay? We did rally from about $10,000 to $65,000, but again, we're including pretty much the worst 6-year time period for Bitcoin's entire life, 2018 to 2024. So we can see that in the year 2018, the average size home in Brisbane costed around $690,000. By 2020, this had increased by around 20%. And the average size home in Brisbane was actually worth $730,000. And guess what this meant if I had to put money into that home in Brisbane in 2018? Well, I would still have that initial $100,000 down payment as equity in the home, but I would also have an additional $40,000 of equity in the home in 2020 because the house price is now worth around $730,000 on average. Let's fast forward to 2024. We can see that same average size home in Brisbane, Australia is today worth about $800,000. So at the end of that 6-year time frame, I'm left with my initial $100,000 down payment or investment, as well as $110,000 of equity in the home. So I have essentially turned $100,000 into $210,000. Pretty good return, don't you think? I've more than doubled my money if I bought a home in Brisbane, Australia. Well, I'm going to be kind to the real estate guys today, and I'm going to ignore all of the additional money that you would have to pay on that home, like depreciation costs, like maintenance costs, like government taxes, like land taxes, as well as all of the other intricate costs that you have to pay on a home in Australia. I'm going to try and be as anti-Bitcoin as possible and pro-housing as possible. So let's just assume you've doubled your money in those 6 years. Well, let's have a look at what that $100,000 invested into Bitcoin could have done. Well, in this column, looking at the Bitcoin price, what I've tried to do is I've tried to take the average Bitcoin price for each year. Okay, again, this is not perfect. This is not a science. This is not physics. This is just an average price. Okay, so we can see the average price of Bitcoin in 2018, somewhere around $5,000. And as you can see, the average price of Bitcoin in 2020, 2 years later, was around $10,000. This means that your $100,000 investment into Bitcoin in 2018 will be worth $200,000, okay? Again, let's fast forward to 2024. The average price of Bitcoin is around $60,000. Yes, it's been very volatile. Yes, it's been lower than $60,000. Yes, it hit a new all-time high of $73,000. But if you have a look at the average, it's around $60,000, okay? So that means that your initial $100,000 investment into Bitcoin in 2018, when it was at around $5,000. Again, I don't know the exact date you would have bought Bitcoin in 2018. It's why we're using an average. But that average, that $100,000 investment today would be worth $1.2 million. So I think pretty clearly that it was a far better decision to go all in Bitcoin with that $100,000 in 2018, that today would be worth $1.2 million, than it would have to buy a average size home in Brisbane, which today would be worth $800,000, and your initial $100,000 investment would be worth around $210,000 if you wanted to pull that equity out of that home. But some people might be saying, Luke, Brisbane? Where is Brisbane? Why are we talking about Australia's third largest city? Why don't we actually talk about some of the best performing real estate markets? Well, challenge accepted. That's exactly what they're going to do. Let's have a look at Toronto, okay? Toronto is known as having one of the biggest housing bubbles in the entire world, okay? Again, let's not forget, Brisbane's housing market has been one of the better performing markets in Australia over the past 5 years. Yes, Sydney might have been a little bit better, but I wasn't living in Sydney in 2018. So let's look at Toronto. We can see property prices were around $700,000 in 2018. So let's run the same example. Let's assume I would have put $100,000 into a Toronto average size home in 2018. Let's again have a look at how that compares to the price of Bitcoin. Well, we can see today that the average size home in Toronto, it's performed pretty nicely. It's worth $1.1 million, meaning your initial $100,000 investment into that average size home in Toronto today would be worth $500,000. Okay, so again, you have that initial $100,000 down payment, but your home has accrued $400,000 of equity because the average size home in Toronto has appreciated by $400,000, okay? So not bad, but it's still nowhere near the $1.2 million invested into Bitcoin. So let's move on. Let's look at an even better performing property market to see if anything can outperform Bitcoin. So I've done the exact same maths equation on houses in Los Angeles, and we can see the average size home in LA in 2018 was once again $700,000. Very interesting. We can see today though, that average size home is worth around $1,050,000 in Los Angeles, one of the better performing housing markets in the entire world. So again, you've got $100,000 of an initial investment into that home, and in LA, you've got $350,000 of hypothetical equity. So altogether, you've turned $100,000 into $450,000. Not bad, but still does not compare anywhere near to the kind of returns that you would receive in Bitcoin. Again, $100,000 invested into Bitcoin in 2018 would be worth $1.2 million today. Okay, now some people might be saying, but Luke, If I own a home, I'm paying off a little bit of a principal on that home, okay? I'm owning a little bit of a home. Doesn't that mean something? I mean, aren't you renting? A lot of people will point to my lifestyle and say, oh, you don't have a home, you're just renting. You're paying off somebody else's mortgage. And that is true, okay? But it doesn't matter what maths equation you want to run. It doesn't even matter if you assume I'm paying an extra $10,000 or $20,000 in rent, okay? Yes, it can be more expensive to rent in Airbnbs than owning your own home, okay? So again, I understand that argument, but even if you run that maths, okay, I might be worse off by $20,000 or $30,000 or $50,000 over that 6-year time period. This is just simply not comparable to the $600,000 differential between the best performing housing market in the world to Bitcoin. I'd happily pay an extra $50,000 in rent, which I think is an exaggeration, but I'm trying to prove a point, to have an additional $600,000 worth of Bitcoin, okay? Now again, in this economic argument, we haven't even talked about depreciation costs. We haven't even talked about property taxes, land taxes, so all of the other costs associated with real estate. But there's a completely other variable in this economic argument that we're not even considering, okay? I know that there would have to be someone watching this video trying to make up their own mind saying, okay, but what about the next 6 years? Should I buy Bitcoin or real estate in the next 6 years? I'd like to remind you guys, I am not a financial advisor. I'm a 27-year-old Australian just talking about things about myself in videos, okay? So again, not financial advice, but something that needs to be kept in mind is that over the past 40 years of economic data, interest rates have been lowered, okay? Every single time we've gotten into a recession, we can see that interest rates have been lowered. This has been brilliant for the housing market. This 40-year period has been the best time ever to invest in the housing market, okay? You could have bought a home in the 1970s or the 1980s with only an average size home, typically costs 2 to 3 times the average person's income in the 1970s and the 1980s, which meant that if the average income was like, $8,000, this means the average price home cost around $24,000, okay? Again, times are very, very different today. Interest rates have been taken all the way to zero all around the world, but 2022 kind of marked a little bit of an inflection point. Interest rates have since been risen at the fastest pace in economic history, okay? Today in the US, they're about 5.5%, and maybe this is the end of an economic era when we're looking at interest rates, okay? Now again, the Fed could lower interest rates to zero over the next 6 months, but just think about the opportunity cost. Think about the asymmetry of the trade, okay? Interest rates were about 20% in the 1980s. They got lowered all the way down to 0% in 2020, okay? You got a 20% spread, and every lowering of interest rates kind of helped to boost the prices of homes even higher, okay? So again, interest rates are at 5% in America today. They could go down to zero, but that is nowhere near the same distance that they got lowered between 1980 and 2020, okay? So that's a little bit of an extra economic argument for why housing might not be as good of an investment in the future, but there's more. There are more reasons for why real estate might not be the best investment. The next one is actually an emotional argument. Owning a home is a big emotional anchor, okay? Let's just think about this scenario of 2020, okay? If I owned a home in 2020, it would have been incredibly difficult for me to sell that home, okay? Again, the housing market is not liquid and sometimes takes 6 months to actually find a seller to buy a home. And all of the extra burden that goes on with selling a home. It's not an easy process, okay? So a lot of people who are even on the fence about selling their home just think, look, it's probably easier just to stay in it, okay? So again, imagine you're trying to escape Australia or escape Canada or the blue states in America or New Zealand or Germany or some of the most tyrannical countries in that 2020, 2021 and 2022 era. I'm making the argument that it would have been harder for you to leave that country, okay? I, again, had a hard time. I had decked out my entire garage at the house I was renting on the Gold Coast into a personal training gym. Okay, so this was my full-time job, started my own business, and I was training clients in and out of that gym. So it was obviously very difficult for me to find someone to buy all of that gym equipment, clean the garage, put it back to its original state. Okay, there's a lot associated with just that. But if I had to do that with the whole home, it would have been even more difficult. So again, I think this is a point that not a lot of people consider, okay? I'm friends with lots of people in Australia who have mortgages on homes, and I can see that in my conversations with them, it's acting as more of an anchor on their decisions about how they decide where to live, okay? Now this gets me into another point. This is something I'm calling the Renaissance age adaptability factor. Now again, that's a mouthful, but what does that mean? Well, technology's, moving and transforming at such an exponential rate today, the industries that you want to be working in and finding yourself in are changing at an exponential rate, okay? So again, only 20 years ago, most people thought of the internet as a joke. Maybe 50,000 people worked online remotely from their jobs. Not many at all, okay? But today, some of the best paying jobs and some of the most lucrative jobs around the world are actually jobs in the technology industry. And a lot of these jobs can be done remotely, okay? So again, there were only 3 million digital nomads working remotely away from their home country in 2019. But today, 2024, there's about 40 million digital nomads all around the world taking advantage of this digital renaissance age that I believe we are in. Now I've got a whole nother couple of videos filmed about the digital renaissance that I do think we're in. We're gonna save those for a later date, okay? And we're not gonna talk about that in detail in today's video. All I'm saying is that if you have a home, you might not be prepared to take advantage of the world we're moving into. We're moving into a world where governments are going to be taxing their citizens more and more in the future. And if you have a home, you are essentially the fat cow at the slaughter, okay? The government looks at you and they think that is someone who is very easy, who we can squeeze some tax dollars out of, okay? That is just simply how the government is looking at this equation. Now I'm going to explain exactly what that means in a moment, but just think about this for a second. I'm going to make the case that you getting approved for a mortgage on your dream home is actually going to anchor you to whatever industry you are currently working in, okay? Let's think about this for a minute. You spend 5 years studying to be an engineer or 8 years studying to become a doctor, and typically you will not get approved for a home loan until you've been working in the same job for around 2 years, okay? So in the case of a doctor, you've spent 10 years 2 working and 8 studying, trying to be a doctor. You get approved for your home, and most people would be aware of the sunk cost fallacy. So the more effort or money that someone invests into having a certain worldview or belief, the harder it is going to be to get them to change that worldview or that belief. This is simply why older people struggle more with learning about technology. They spent the first half of their life living without technology, okay? Now this is going to be especially dangerous in the digital age. So we're not going to go all the way down that rabbit hole in today's video. There's 2 more things I want to point out. The first being the taxes situation. We briefly touched on it earlier, but just think about it. The world is kind of beginning to talk about higher tax rates, okay? That's not controversial. We can see in America, the idea of unrealized capital gains taxes is being talked about more and more. And if you're sitting on a property, well, every property market in America has gone up over the past 10 years, so the government's going to come knocking on your door and asking for a cut. Also see it in Canada. Most recently, Prime Minister Trudeau started talking about the possibility of taxing companies 66% on their profits in the country, which again is ludicrously high, okay? And even in Australia, something even more interesting is happening. The government is coming in to take a 30% stake in your home. Now, of course, they're framing this as helping the little guy, beat the housing unaffordability problem that the government created themselves by printing money and lowering interest rates, okay? That, of course, has pumped the price of the housing market. But now the government is using this scenario that they created as an excuse to begin becoming part owners in your property. Now again, I don't think I have to really spell out why this is concerning. All I'm gonna have to do is show this image right here of the World Economic Forum's prediction for the year 2030. But let's move on. Before I show you the final comparison of Bitcoin versus real estate, which is an interesting one and I don't think many people are prepared for it, I just wanna show you the economic returns compared to Bitcoin, okay? So we all know that Bitcoin's outperformed real estate, but something I want to really point out is the fact that real estate hasn't actually been performing as well as most people think. Now this website here is a firecracker and it's going to explain my point perfectly, okay? You can see the first chart we're looking at is US home prices priced in US dollars between 1964 and 2017. We can see the chart is up and to the right. Let's scroll down a little bit further and have a look at this though. When you price the same real estate market in America in gold, we can see that that same real estate market is down 60%, okay? So this is highlighting the fact that when you denominate real estate in a form of money that's not changing like gold, or it's not being manipulated as much as fiat currency, real estate really isn't that good, okay? It's underperforming gold, and this isn't just happening in America. When we scroll down, we can see the same for the UK, okay? Home prices in the UK denominated in the British pound looks like an up and to the right chart, looks very bullish, right? Well, let's scroll down a little bit further and we can see that home prices in the UK are down more than 70% priced in gold since the 2008 housing bubble peak. We can see something similar in my home country of Australia. Priced in the Australian dollar, real estate looks like a great investment over the past 50 years. However, when we price that same Australian real estate market in gold, we can see property prices are down about 40% since their 2006 peak. So economically, Bitcoin is the far superior asset to invest in over real estate. And even over the last 15 years, an argument can be made that real estate hasn't really outperformed the debasement of the fiat currency, okay? But let's dig a little bit deeper. Something that's really interesting is that real estate is kind of exclusive, okay? When we have a look at this wealth pyramid, we can see that not a lot of people have a $100,000 down payment for a home. A lot of people don't even have $100,000 in wealth, okay? So this is where I think Bitcoin is very interesting because you can become a part of the new millionaire class on a Bitcoin standard with only 0.015 Bitcoin or $975 worth of Bitcoin today, okay? This is the scary reality when you apply a Pareto's principle distribution onto a Bitcoin standard. We can see that only 80 million people in the world can be a part of this new millionaire class. If you want to learn more about how you can join those 80 million people in the new class of millionaires on a Bitcoin standard, if we assume a Pareto's principle distribution will apply to a Bitcoin standard, you're in luck. We recently filmed a video on that topic. I'm going to put a link to that video right about there.